All right, everybody, welcome to our Friday night, not Wednesday night, Friday night weekly wealth creation course. If you're just joining in, I want to welcome you to our course. We do these every Friday. And my name is Jerry Fetta. So I'm the owner and founder of a company called Wealth Dynamics. And what we do is three major things. We help families and individuals become financially educated. We help people actually build wealth, and we help people navigate their economic futures with greater certainty. Because that's what it's about. Finances should be easy. They should be simple. It should be something we all win with. So we've been doing these courses every week, going on the last 3 years now. And really the purpose of this course is to share what I know with you guys. Okay, I spend all of my time studying money. And so as I learn about it, I like to share it. I like to make sure that it's something everyone can benefit from. Let me get Instagram up and running here too. And the reason being is finances are not something that I naturally grew up with or knew about. Okay, it was kind of a mystery topic for me. It's something where my family didn't have a lot of money. I didn't know anyone that had money. The first time I talked to someone that had ever made $1 million, I think I was 19 or 20 years old, right? Where they made money and I knew about it. Plenty of people I talked to where they made money and I didn't know about it, right? So I didn't know what questions to ask. I didn't know how to win with money. I didn't know any of this stuff, right? And so when I do these courses every week, they're on finances. So we're talking tonight on finances. And the question that I'm going to pose to you is, who do I take financial advice from? Okay, who do I take financial advice from? Okay, do I take it from my parents, my teachers, my peers, my financial advisor? Do I take it from somebody I've seen on Instagram or Facebook or some social media profile? And that's really what I want to go over tonight. Now, as we're diving into this, we've got Facebook going, we've got Zoom, we've got LinkedIn, we've got Instagram, YouTube. Good to see all you guys. I want to go ahead and lay down some ground rules before we jump into our webinar tonight. So if you're watching this right now, again, we're talking finances. Okay, finances are a topic that if you get it and understand it, life is easy. Okay, no one ever told me this. Like, that is the easy button. You want life to be easy? Have money. Period. All your problems become inconveniences when that's the case. If you want life to be hard and difficult and a lot of effort and not make sense and be confusing, don't have money. No one ever tells you that. They tell us money is the root of all evil. Money isn't everything. I'm here to tell you, at 28 years old, I've become a millionaire. I've done all the stuff with finances. My life got easier when I got money. Okay, prior to that, I didn't have a lot of wins, right? And so when I'm watching this feed tonight, I'm looking at, okay, if I'm watching this, I've either got money and I'm looking at how to get more, or I don't have any and I have a lot to learn. And it can be one of those topics where, because money is a difficult subject for many of us, it's easy to like have things that we don't understand that go over our heads and then give up on the topic. So one of the first things I want to go over tonight is, if at any point tonight you're like, I'm watching this, I'm interested, and then all of a sudden I'm not interested, that means that we went over something you didn't understand. Okay, so if that happens, I want you to ask questions. Now, in this role, I'm kind of like the teacher. I'm giving you knowledge, I'm giving you information. You're kind of like the student. So it's your job to let me know if you have questions. I can't read your mind, so if you have questions, drop them in the comments. Okay, so that's what I want to cover first. Now, second thing is to be respectful. Instagram, I'm talking to you guys. This is a Friday night. There are people here that have dedicated their time to learn. Like I said, we've been doing these courses every week for the last 3 years. And so there are people that take time out of their week to actually get on this course and to get the advice and get the information. Okay, actually, let me fix my mic situation really quick. Hey, Lexi, could you come help me with my mic? So there are people that get on this course because they want information. Okay, the cord back here. They want information about finances, and they're dedicating and devoting their time on a Friday night to get it. So those of us that aren't that are just on here because we're bored, or we ran out of video games to play or YouTube videos to watch, and really we're not here to learn, don't ruin it for the people that are. Okay, so be respectful with your comments. Make sure if you have questions, they're legitimate, they're valid. And then thirdly, we will go live tonight at the end of this. Let me plug in my mic really quick here. Let me know if that's our USB mic instead. So thirdly, we will go over questions tonight. So if you have them, drop them in the comments. If you're on Zoom, as always, we will answer your questions at the end live. So we'll be able to ask those on air with me on the live stream tonight.
Sounds good. Awesome. So guys, without further ado, what I want to do is I want to dive into our topic. I'm very excited about this because in this space, I'm kind of an anomaly, right? 28 years old, right? And I've become a millionaire multiple times over by this age. I run a multi-million-dollar company. I help people all across the country with finances. Okay. But you don't see me showing off Lambos. Okay. You don't see me living in a mansion on any of this stuff because I understand money. Okay. Now, when I got into the industry, I was 18. When I say the industry, I mean the financial industry. Right. I was 18 years old. I didn't know anything about finances, and I passed some tests and I got some licenses that told me that I was allowed to tell other people about money. Okay. But I had this thing the entire time where I was like, man, I'm only 18, 19 years old. And I'm talking to people that are in their 30s, their 40s, their 50s, their 60s, their 70s, who sometimes have millions of dollars. And at that time in my life, I didn't have that. Okay. So I had this barrier in my own life and my own business of, okay, well, am I somebody that I would take financial advice from? How do I become valuable to people despite not having been at the level they're at yet? How do I bring information to them or planning to them or systems or tools that can still help them regardless? Okay. Now, the question we're talking about tonight is, who do I take advice from when it comes to money? Okay. Who do I take advice from when it comes to money? Now, this is an interesting time because 5 years ago, the only answer was a financial advisor, right? Like you would sit down with your boy at Ed Jones or Waddell and Reed or whatever financial advising company, and that was who you took money advice from. There was nobody else, right? Maybe you listened to Dave Ramsey, maybe you listened to Sue Zorman or some other radio host, but that really was the equivalent or the extent of where people could get financial advice from. Okay. Today we can go online and there's, freaking Robert Kiyosaki and Grant Cardone and all of these guys we can listen to. So there's two crowds that are probably on this tonight. There's the traditional, like, I work with a financial advisor or an insurance guy. And then there's also the newer phase of, okay, well, I get most of my advice from people online. And so what I'm going to cover tonight applies to both groups. Okay, whether I'm old school and I sit down in an office across from a desk with somebody that's got letters behind their name, or I get my advice from YouTube videos and Instagram stories, what I'm going to go over tonight will help you. Okay, because at the end of the day, who I take advice from matters. Okay, now to understand advice, I want to dive into this first because it really sets things in the right tone. To understand advice, advice literally means an opinion. An opinion, that is advice. When somebody shares advice, they are giving you their opinion. Okay, everyone has an opinion. Everyone is entitled to their opinion. Now, just because someone has an opinion doesn't mean that they're qualified, doesn't mean that they're credible, doesn't mean that they have a track record, doesn't mean that they have your best interest at heart, doesn't mean that they're going to help you after you've gotten their opinion to implement the information. And so you've got to look at all of this other stuff with money and go beyond just whose opinion do I like, right? So what I want to do tonight is I'm going to read a little bit from my book. So if you're watching, this is my book, How to Create Wealth, on the screen here, How to Create Wealth. I wrote this 2 or 3 years back. And again, if you want to follow along, if you have the book already, you can. If you want to follow along, you can. We're on page 50. If you don't have the book, you can grab a copy of it. If you go to jerryfetta.com, you can get a free copy of it and have that in hand. But the chapter we're going over is called, What Do I Look For in a Financial Coach, Advisor, or Mentor? Okay, so I want to read a little bit from this, and then I'm going to go through and break down some of these concepts with you guys, because at the end of tonight, I want you to feel confident in who do I go take my financial advice from? Who do I listen to, right? So again, How to Create Wealth by Jerry Fetta. I am Jerry Fetta. You can get a copy of the book at jerryfetta.com. But I'm going to go ahead and give you guys a little bit of what's in here. So the first thing is I have in the book here is the financial services industry is loaded with financial professionals touting letters behind their name on their licenses, business cards, and pursuing the latest and greatest license, certification, and designation. I've been in the financial services industry, and I've seen a lot of advisors obsess over these certifications like Gollum from Lord of the Rings. I have seen clients make multi-million-dollar decisions over these licenses and certifications. So the question is, do they matter? Now, I want to dive into that, but I want to show you the different categories that you're going to be looking at if you're looking at taking financial advice from someone. Or as Arnold Schwarzenegger would say, advices. Okay, so I'm going to go ahead and make my other screen the host because I'm going to draw this out on my whiteboard for you guys as well. Now, if you guys are on Instagram, you're not going to be able to see the whiteboard. So if you'd like to, you can go to course.wealthdynamics.com and you can register for our Zoom course really quick, and then you would be able to see them. All right, so I'm going to go ahead and draw out the different categories that you're going to be looking at if we're taking advice from someone on the topic of finances. And whiteboard, here we go. Perfect. So what we're looking at here is we have, like I said, we have the traditional, ooh, we're yellow tonight. We have the traditional type of advice, which is going to be like a financial advisor, right? The main things that you're going to see with a financial advisor is you're going to see licensing. Okay, you're going to see brand name recognition. You're going to see a relationship. These are all qualities of why people would take advice from someone. Relationship. You may even see pedigree, right? They're from a certain, community or family or group. Like those are the main things that make a financial advisor kind of, appealing to a client or somebody that's looking for financial advice. So if I'm in my, mid 30s, 40s, 50s, 60s, 70s, and I've worked with a financial advisor, what are the first things we look for? We look for what kind of licenses do they have? Okay. What company do they work for? That's the brand. Do they work for Merrill Lynch? Do they work for Edward Jones? Do they look for what? Do they work for Waddell and Reed? Do they work for, New York Life, whoever it might be? What is their relationship with me? Right? They go to my church. They know my kids. Do they go to school together? Is it a coworker's referral? Like those are things we look for. And then we also look at pedigree, right? Like where are they from? What's their background? What kind of family do they have? Like, are they people that in the community are known to have money? Like those are things that are important. Okay. So that's like a traditional financial advisor. Now, like we talked about, the other one we have now today is influencers. When I say influencers, I mean people that are online that are, giving financial advice, kind of like I'm doing tonight, right? So an influencer, we don't usually look at licensing, right? Like we don't, like when somebody watches a video on YouTube from somebody talking about stocks or bonds or Bitcoin or real estate, usually the first question asked is not which financial licenses does that person have. Okay. So we don't look at that. With this one, we typically look at information first, right? We look at what kind of information do they have, and is it stuff that I'm interested in, right? Because that's the surface level. Now, there's a big difference here. Today, we get information first. If you were working with a financial advisor back in even 10 or 15 years ago, you did not get information first. So that's a distinguishing factor to look at. If I'm looking at getting financial advice, there's a lot more free information today. Okay, branding. We still probably look at branding, right? So do they have a company? What are they about? What is their brand? Who are they? What's their background, right? The relationship thing doesn't matter so much. Instead, now people kind of look at connection. Do I feel connected to this person when they talk? Okay. And then similarly, we don't really look at pedigree. Instead, we kind of look at swag or stuff. Okay. Swag literally, like to me, that means like the stuff the person has around them. So if I'm an influencer, okay, it does me well to show, if I'm wearing nice clothes or driving a nice car or those types of things, right? So those are the types of things we look at in a comparison or a contrast environment. I want you to realize none of these things are the same from one column to the other. Okay. So when I came into the financial industry first, we weren't allowed to do YouTube. We weren't allowed to do Facebook. We weren't allowed to advertise on Instagram. So the information thing on the influencer side was not a thing as a financial advisor. Instead, it really was, what kind of license do you have? Okay. And when I say license, I mean for a financial professional or an advisor, there's state licenses and federal licenses that I would have to have in order to offer certain services. And if I don't have those in that environment, it's illegal for me to talk about or discuss or offer certain services. So in the financial advisor world, that's a thing. In the influencer world, it's not. Okay. The pro of that is that there is some quality control there. Okay. Who's ever taken advice from an influencer online and then it turned out to be a terrible idea? Okay. Some of us may have. I know I've seen it. I've never taken advice like that because I've always known better, but I've seen it and I'm like, man, I really hope no one listens to that person. Right? Now, the licensing solves that problem. In the financial world, if I were to give bad advice and it was something I was licensed in and regulated by the government on, I would get in trouble. There's actually some kind of a repercussion or consequence. Okay. So you'll hear on a lot of like influencers, you'll hear Robert Kiyosaki says it all the time. We don't give advice. Really, he's just disclosing after the fact. We don't give advice because he doesn't have a license. And if you go after him, he can't really be like, yeah, I was giving this person financial advice because he's not licensed for it. Okay. So the influencer can give information, but like I said, there's nothing to back it up. There's nothing to verify that it's a good idea. There's nothing to make sure that what he's saying is actually going to help you and not hurt you. The licensing kind of helps with that. Branding, really no different, right? Someone can make their brand what they want it to be, whether they're a financial advisor or an influencer. Okay. The relationship or connection factor, that's also not something I really look at. Okay. So on a financial advisor, it's like relationship. I've seen some people get screwed over by folks they went to church with that were their financial advisor that they feel good about because they're in the same group together and they're buddies and they see each other once a week and their kids play together, but the person ripped them off still. So the relationship is a perception thing. And for me, that doesn't matter. Same thing with connection. Okay. When I get information online about money, it has nothing to do with the connection that I feel for the person. This is not a dating website. This is finances we're talking about. So we're not looking at connection. Pedigree, same thing. I don't really look at pedigree either. Okay. I don't have pedigree. Okay. I'm not from a wealthy family. I'm not somebody that grew up in money. I don't have, any silver spoon or upbringing that would make me special or different or important when it comes to money. Right. So the pedigree thing is not big to me, and neither is swag. I can show you guys my assets, but I don't have a Lambo. Okay. I can show you my passive income, but I don't live in a mansion. Right now I'm in a hotel room. Right. So like the swag thing to me, like that's another advertising approach. So when we're looking at money, what we want to look at instead of all of this other stuff, is first, what are our goals? Okay. This is the number one thing we should be looking at. What are my goals? Okay, I talked about this in an article a couple of weeks ago that I wrote. The number 2 questions I asked, number 1 and number 2 with money, okay? Is this a good idea for me? And then is this a good idea right now? That has to do with my goals. So when I'm looking at working with a financial advisor, or I'm looking at getting advice from someone on money or following an influencer when it comes to money, they might sound good. They might have all the licenses in the world. They might have pedigree. They might have all this stuff. To give you guys a hint, I have all 8. I have licenses. I do all of the things I just listed on the influencer side and the financial advisor side. But that shouldn't matter to you. Your thing should be, what are my goals? What am I trying to accomplish? If I'm watching this online right now, what am I trying to accomplish? Not how does this person sound, or what does it look like, or do I feel a connection with them, or are they showing sick cars on their Instagram, or does he have a bunch of letters behind his name, or do we go to church together? Those are not things that should matter whatsoever. Okay. What are my goals? Okay. And then the second thing that I look for is is this person a professional? Okay. And I don't mean professional, because professional to me means 2 things. Professional is number 1, there's the modern day definition, which is kind of like a participation trophy. Everybody calls themselves a professional, but a professional means the person is freaking good. Like they make money at, like, this is their thing. Right? Like, are they a professional? Are they top of their field in what they do? Does not matter to me what their licenses are or any of that stuff. How good are they at what they do? Right? If this is a real estate guy I'm talking to, how good is this person at real estate? If this is a tax guy that I'm talking to, how good is this person at taxes? Now, the problem is a lot of us might not know enough about those areas to ask that question or to get a good answer. Talked to a client today and it was a great phone call, but she's like, honestly, I don't know enough to ask questions. So I just trust you. Now I gave her some education because that's the number 1 mistake you can make, is to just trust someone. But I want to know, are they a professional? This is important to me because, again, I got in the financial industry at 18. Okay. 18 years old, didn't know jack about money. I was broke. I didn't have licenses. I just got in. Okay. And I remember talking with one of my managers because I had this reluctancy where I was afraid to meet with people. I was 18 years old. I was like, man, my first meeting was with my mom, right? I sit down and I'm thinking about, okay, I have to call these people. These are people that I went to church with. These are the parents of people I went to school with. These are clients of mine from back when I was a personal trainer. And I knew I lacked credibility, and it showed. And my manager, he pulled me aside one of those times, and he pulled me aside and he's like, hey, you're 18. And I want you to think about this. When Tiger Woods was 18, he signed a multi-million-dollar shoe deal with Nike. Okay. Do you think Nike cared how old he was? And I said, no. He's like, same thing. LeBron James, multi-million-dollar shoe deal with Nike. Do you think Nike cared how old LeBron James was? And I said, no. And so he's like, great. So I want you to tell me, why not? Why didn't Nike care about their age? And I thought about that because I'd never thought about that before. And I realized it was because they were that good at their skill. They were so good that a multi-billion-dollar corporation was willing to overlook the fact that a year ago they were kids and give them multi-million-dollar contracts when they had no track record as professionals yet. They could freaking quit the next year, right? And Nike would just be out. Okay. So for me, becoming a professional mattered. It meant that 60, 80, 90, sometimes 100 hours a week, I was studying and working and mastering my craft. To me, that is the second thing that matters. First thing is goals, because the goals are about me and my finances. Okay. Second thing is about, if I'm going to hire a professional, it better be SEAL Team 6. Like, they better be so good at their craft that I don't have to worry about what licenses they have or who they go to school with or any of that stuff. Right now, this is important because, like, these are not things that I was taught to ask or look for. And I'm guessing it's probably not things that most of you were taught to ask and look for. Right? So if I'm sitting on Instagram watching stories and I come up with some guy touting stocks or real estate or what, any myriad Bitcoin things, I have to look at first, what are my goals? Okay. Because my goals aren't to buy something at a really low price and then sell it years later at a really high price. And instead, my goal is I need to get out of debt, or I want passive income, or I'm trying to plan for my kids' college. Then it really doesn't matter what the guy talks about. Same thing if I'm sitting down with a financial advisor. Like, if I don't know my goals, his goals will become my goals. So if he's pitching, life insurance or annuities, I need to understand, what is my goal? Because that's going to be my filter. And then secondly, again, if I'm on Instagram, I see some dude talking about money. Is this guy a professional in that area? Not, is he driving a Lambo? Is he a professional? Okay. Now, the work that you'll have to do to determine if he's a professional is going to be some legwork, and it's going to be worth doing. And it's also on future circumstances that are similar, going to help you realize when people are and are not professionals. People who aren't professionals, they don't give you information. Okay. They give you a pitch about the pitch, 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 about the pitch for you to get on the webinar, to get a pitch about the book, to get a pitch about the coaching program, to get a pitch about the 3-day mastermind event in some island. That's not a professional. Okay. A professional can help you like that. You look at their information and you get it, and immediately you get help. That is a professional. Okay. Do you know why? Because a professional has no lack of having this on getting clients. They know they're good. The person that has to create this bread trail of advertising and promotion to give you this thing to get you excited, and this thing to get you excited, and this thing to get you excited, and this thing to get you excited without ever actually giving you anything, they have a lack of the ability to have new clients because they know they're not professionals. See, like for me, I'm so good. I give free information all day long. Stuff I could charge for, stuff I could say is worth X amount of dollars, but at the end of the day, I can produce so much of it because I'm that good, because I've put in the time. Okay. So what are my goals? And is this a person a professional? Now, I want to hit, because on the professional thing, like the education is big on this. So I want to hit like the licensing thing on this. Like, does this person have education or licenses? So this is really similar to driving, I'm going to say. Okay. We've all driven cars, hopefully, before. Maybe some of us haven't so much in the last 12 months, but all of us know about cars and have driven them. To drive a vehicle, you do have to have a license, right? So you have to have a license to drive, right? In finances, you also have to have a license to drive, right? So there are certain things that I have to have a license for. For example, if I want to sell insurance, I better have an insurance license, right? So I need a license for that. Now, what I don't need to sell insurance is a license for financial advising, right? Just like if I'm driving a car, I don't need to have a CDL to drive a car. CDL is for people who drive trucks. Okay. So let me change my color here. I think red looks better on this. So I need to have licenses. Okay. If I'm selling stocks, there are licenses for that. Okay. The license that I need to have to sell stocks is not the license that I need to have to sell insurance. Okay. If I'm selling real estate, There are licenses for that too. The license that I sell real estate with is not the license that I sell stocks with or the license that I sell insurance with. So there are basic licenses that I need to have to legally give advice or transact in a certain line of business. And that's important to understand, because not having those licenses is the equivalent of someone driving without a license. You would never get in a car with somebody if you knew they didn't have a driver's license, right? So on the professional side of things, what I'm telling you is, if you're getting advice from somebody in a certain area with finances, or you're getting help from them, make sure they have their driver's license in that area. So if they're like, hey, I'm going to teach you about Bitcoin, great. Let me show me what certification and license you have to teach me about Bitcoin. I bring that one up because nobody has one. It doesn't exist because it's such a wild, wild west industry, but everyone takes advice on it right now, right? If I'm talking about stocks, right? What license do I have? I don't talk about stocks because I don't have a license for them, because I don't believe in them, right? If I'm talking about private placements, okay, on this one's interesting. You can have a license, or you can be a finder with no license, or you can be an issuer, meaning you own the fund. Then you don't need a license. If I'm a licensed person talking about private placements, like, accredited investment deals, I better either be licensed, or I better have a finder relationship with specific funds who will sponsor me so that I can actually have the legal ability to talk about their stuff. Or I better be an issuer where I am the fund, and so legally I can talk about my own stuff and take on my own liability. Okay, but let me ask you this. How many YouTube videos have you watched of people telling you, buy this stock, get into Bitcoin, get real estate, get into life insurance, get into these private investments that we have, but you have no idea what licenses they've got? Happens all the time. This one thing would save you so much, but you have to understand which ones apply, right? So again, these are the basic licenses to drive. So if I want to sell stocks, I have to have the stock license. If I want to sell insurance, I have to have the insurance license. If I don't have that and I'm trying to sell that, that's probably a federal crime. Automatically, I know that guy's not a professional. If he's committing federal crimes, you can pretty much bet that's not professional, right? Now, there are also other licenses that are not important. Okay, these are licenses for people that lack value. So these are called designations and certifications. Now, I'm not saying education is bad. Some of the licenses that people get with this, they might go through education that helps them personally, but that's them, not you, right? So some of these licenses are things like a Series 65. You guys probably don't know what that is, but you've probably heard people talk about fiduciary. Okay, a fiduciary is somebody that has a Series 65 license. Another one is the CFP, Certified Financial Planner, right? You can also get your retirement income counselor. I think that's your RIC, right? You can get all sorts of auxiliary licenses. And these are things that you don't need to drive. Like, it doesn't actually get you anything. Like, and it's important to know this because people that have these licenses are typically going to charge you more for it. Right? So if I work with someone that says, hey, I have a certified financial planner, CFP, this means that they took a test with a private organization that sells tests to people that want to take tests in the financial world. And then you get certified and be able to say, hey, I'm a certified financial planner. There's no difference in results. If I hire a certified financial planner and someone who is not a certified financial planner, there's no proof that I get anything different. In fact, these guys can't even claim there's a difference. So usually when I see somebody with all the letters behind their name, it means that they don't know how to prospect, they don't know how to promote, they don't know how to market, they don't know how to advertise. So because of that, they have to get all of this stuff to make them seem more qualified than they need to be, because they need a differentiating factor, because nothing else makes them different. Right? So when I'm looking at this, again, this is not pedigree. This is just licensing. This is not results. This is not any of the stuff we looked at. Same thing with the retirement income counselor or the Series 65. This is the big one after Tony Robbins' book came out a couple years back. Everyone wants you to have a Series 65. Series 65 is for fee-based financial planning. Meaning if I want to sell you stocks and bonds and charge you an annual management fee in addition to the fees you're already paying to the mutual fund company, then I need a Series 65 license. If I don't do that, then I don't need one. See, this is where people can get confused on the licensing because they'll read Tony's book. They're like, man, I like Tony. He gets people to walk on fire. That's motivating. He wrote a book about money. Sounded really good. I like him. I feel connected to him. He seems like he's got money. I see him all the time with his jet and his island and stuff. He must know what he's talking about. Then they'll go listen to Tony's advice. Tony will say, don't work with anyone that doesn't have a Series 65. Okay. So, yes, Nano, go ahead. So Tony will say, don't work with anybody that has doesn't have a Series 65. Well, if you work with someone that has a Series 65, you're going to pay 1 to 2% in addition to all the other fees. Okay. All the other fees you're already paying. Okay. So you basically are going to pay fees on top of all the other fees just to be able to work with this person. Okay. So it's important to understand this because if you don't understand that, you're going to overpay for something that you were probably going to get anyways, just because you wanted to have this person have this letter or this license or this thing behind their name. So it's important to look at that. Let me go ahead and do something really quick with my attendee list here. So again, on the licenses thing, that's fine. On the licenses thing, Nano, we'll have to do that another time. On the licenses thing, basically, you've got to look at what is actually needed. Okay. So again, on the licenses, there are different ones you need. There are different ones you don't need. So the large priority on the designations is that there's something that people, when they get them, the advisor feels better, right? So when you get an advisor that has an extra license, they have a CFP, they have a Series 65, what are you actually getting? Okay. So a client who works with someone that has one of these licenses guaranteed absolutely no difference. This is again from my book. The product or service will actually be the same as when buying from someone who is not one of those. So you're getting the same product. Let's say you hire somebody that's a certified financial planner. It's the same product as the guy who's not. There's no difference there. B, the licenses are often gimmicks to justify charging higher fees. The only real difference when working with a professional designation is they will probably want you to pay them for it. For me, in the world of investing, I call this entitlement. Okay, I call this entitlement. It's like someone coming to work for me and expecting a higher paycheck simply because they went to college. It literally is the definition of I have a piece of paper that says I got educated, therefore I expect more. That's a college degree, man. There's no value to me in that. C, these licenses are typically obtained by advisors who are not sold on themselves and produce low results. This is not a blanket statement because I have met 1 or 2 excellent designated professionals. But here's the thing. A financial advisor is an entrepreneur. An entrepreneur's value is gauged in the marketplace by the value they deliver to their clients. Value shows up on revenue or profit. Either you help people make money or you help them save money. So if an advisor believes that their differentiator is a piece of paper rather than just doing an exceptional job helping their clients make or save more money, it means that advisor does lack real value in the marketplace. Clients pay for results. A test and a license doesn't produce results. Yes, knowledge is important, but knowledge does not create a noticeable difference in results and is simply not valuable. Okay, this is another one that we got wrong in school. Knowledge is not valuable. Okay, results are, right? So if I have knowledge, it doesn't actually mean I'm good at the thing I know. It doesn't mean I actually understand the thing. It doesn't mean that I actually get results at it. So there's a vast difference between knowing about something and actually winning with it. To me, this is the epitome of the college professor. Why would I learn about something from somebody that's just read about it? I would like to learn about something from somebody that's done it, right? They've actually gotten results in that field. So somebody that's saying, I'm a certified financial planner, or I have a Series 65 license, or I have this license or that license, it makes me different, special, and you should pay me more, is really saying, I have knowledge, yet I've shown you no results, and I'm entitled, and I want you to pay me extra money for it. Okay, that is like, even if they do a good job, to me, that is a ripoff. Like I'm overpaying for the same exact thing. There's no difference in the value scale. Now, if they're adding more value, certainly. Right? Certainly. But if they're not, then there's nothing actually that's being gotten. D, the information in these licenses is not worth the money paid for them by the advisor, nor the money charged to you, the client. I believe competence is only measured by results. So if you're working with a licensed person that has access to the same products as the non-licensed person, it means the same results will be produced either way. So a retail product in the financial world is a retail product, whether you buy it from, doesn't matter which license you buy it from, you're buying the same product either way and getting the same result. So that's what I want to break down on license. Now, the other thing I want to talk about on this is, do the wealthy actually use them? This is something, when I first learned about it, blew my mind, right? So we have this thing called a financial advisor. Okay. We also have this thing called an influencer. And then we have this thing, most of us don't know what this is called. If you're a client of mine, you do. It's called a family office. Okay, I want to go through these and talk about each of these because this is important to understand the difference, and it's important to look at who uses them. Okay, so we've talked about a financial advisor, right? So someone that gives advice, they sell products, they manage money, they answer questions, and what else do? They read you your statement. And they also do some counseling. They'll talk you off the ledge and be like, hey, don't sell your stocks just because the market's down. That's a bad idea. That type of thing, right? So a financial advisor, they're going to give you advice. They're going to sell you a product. They're going to manage your money. They're going to answer your questions. They're going to read you what your statements say. And then they're going to give you maybe some counseling on the subject of money. We're going to say financial counseling just so people don't think this is like an Oprah thing they're getting involved in. Financial counseling, right? Now, I want to just go ahead and throw this out there. All of this can be accomplished with a website. So if this person just gives you advice, I could get advice online. Okay. If this person just sells products, I can buy products online. If this person just manages money, there are apps that will manage my money. If this person just answers my questions, I can get my questions answered on Google. If this person just reads me my statements, I'm not illiterate. I can read. I don't need someone to do that for me. So really it comes down to, if I'm working with a financial advisor, the main thing I'm paying for is the counseling, the relationship, the conversations, the feeling like I've got a money guy, right? That's the main thing I'm getting with a financial advisor. Now, the wealthy don't use financial advisors. This is not something that I knew about because, again, I grew up poor. I didn't even grow up in the middle class. So when I learned about financial advisors, I was like, man, wealthy people must use those, right? And so I thought that was the way you go, and I thought that was who you hire. Little did I know that the concept of a financial advisor only came around in the 1970s. Okay, in the 1970s, this idea of the financial advisor became popular. Okay, the reason it became popular was because in the 1970s, employers started switching from pension plans to 401k plans. Somebody's got to be in charge of the 401k. The employer can't. They need a third party or a middleman to be in charge of it. Thus, the financial advisor is born. Okay. Prior to the 1970s, there was no such thing as a financial advisor. You had a stockbroker or a bond broker. A broker is just somebody that sells you a thing, right? Stockbroker, a bond broker, they'd sell you a stock, they'd sell you a bond. They didn't care what you did with it. If you made money, if you lost money, it wasn't up to them. They didn't care. They cared about if they made a commission, right? People didn't like that in the 1930s and the 1920s. A lot of people got taken advantage of by brokers. So we came out with the Securities Exchange Act in 1933. And then we followed that up in the 1970s by then popularizing the idea of you need a financial advisor because you don't have a pension anymore and you have a 401k and an IRA and it has all these investments that you don't know about. You better hire a professional. Okay. Now back then, to give the benefit of the doubt, we didn't have the internet. So people couldn't just go online and get advice and get products and manage money and all this stuff. They did need a person. But since 2000, we've had the internet. We've had it in a big way. Today, you can do all of this stuff online, right? So the wealthy, though, I want to point out, the wealthy, they've never used financial advisors. The wealthy use something called a family office. We're going to talk about what that is in a second. Okay. Now, fast forward to like 2010, we start getting influencers. Okay. Influencers. These are people that they also give advice, right? Sometimes they sell products. They don't manage your money. Sometimes they'll answer questions. They're probably not going to read you your statements. They might give you a little bit of counseling or personal advice if they're willing to do that. And then they're also going to be motivational and do all of the influencer stuff by showing you their Lambo and their watch, right? Now, the influencer, that's a new thing. In my opinion, and the influencer in different industries is different. In my opinion, in the financial world, the influencer came about by people who wanted to be financial advisors, but they didn't want to go through the process of becoming one. They didn't want to have to go pass the tests and take the licenses. They didn't want to work for another firm. They wanted to be entrepreneurs. They wanted to live the laptop lifestyle, and they wanted to do it now. Okay. So what influencers do, and I'm an influencer, so this goes for everybody. What influencers do is they have some kind of source of information, and they're going to share that with you in their own way. Now, the truth is most influencers are going to copy whoever they learned it from and just reword it to make it sound like they came up with it. And they're really regurgitating all the same stuff that usually originated from the same 2 or 3 guys. Okay. You look at any financial influencer today, they're a mix of Jim Rohn and Robert Kiyosaki and maybe Dave Ramsey. Okay. Before Dave Ramsey, there was Crown Financial. Dave Ramsey is an influencer from Crown Financial, right? He watched the Crown guy. He got all his stuff from him, became Dave Ramsey. So if you look at it, that even goes back further, right? So the influencer thing, the problem here is you don't know where they got their advice from. You don't know if they even know what the hell they're talking about. They might just sound really good on an Instagram story. They might just be really good at making YouTube videos. You don't know anything about them other than in a 30-second clip, they looked like they knew what they were talking about. Okay. They usually do sell a product. I've never met an influencer yet that didn't have something to sell. Now, there's nothing wrong with selling. I sell things. If you want something, I will sell it to you gladly. Right. But if I'm going to sell it to you, I should know what it does. I should know how it affects you. I should know where it came from. I should know a lot more about it than you. I should know a lot more about it than you would be able to find on Google. Right. Because that helps me make sure I'm doing a good job for you. Right. Answering questions. Same thing. An influencer might answer your questions, but here's the problem. And this is what I've run into time and time again with influencers. They don't come with you after you buy their thing. Sure, they might have a 1-800 number, or you might be able to DM them on Instagram, but I've fallen into the trap of, man, this guy knows what he's talking about. I better do everything he says. Then I find out that he only gave me 75% of what he's actually doing. So I'm running around with 3/4 of the ingredients trying to figure out why what this influencer told me doesn't actually work the way he said it would. Well, it's because there's missing components, right? So they're not going to go in depth like a financial advisor would on counseling you and really getting into your situation. This is where a financial advisor would be unique and different. They're going to look at your situation, hold your hand, make sure you get it down, right? Influencer, you might get some time with them on a live and that's it. Okay. They're not really going to do a ton of counseling. They might do a little bit like via the comments, but that's kind of the extent. And then the motivational stuff, like to me, that's nothing. I don't believe in that. Right? Like if you need to be motivated, then what about your wife or your husband and your kids and your goals and your dreams? That should be motivating in and of itself. Okay. I don't motivate my clients. Okay. Like that's something they've got to bring to the table themselves. It's not my job and it's not something I'm interested in. So the influencer thing is part of being motivational. I don't think that that's valuable. I don't think that that does anything for you financially, because at the end of the day, it's like getting high. Boom, motivation's gone. Someone's got to pick me back up again. I should be able to generate that myself, right? So the influencer, again, is a modern thing. It's different than a financial advisor. And the main difference is they usually can give more information for free. That's the pro. The con is you don't know where the information came from or what their depth of understanding and application is. And you're not going to get much help from them after in implementing it. Okay. Now, wealthy people don't use either of these. You walk into your city's cigar club where wealthy guys hang out. You go to the golf course or the country club. They're not going to be talking about who they saw on YouTube yesterday. They're not going to be talking about, and the wealthiest ones are not even going to be talking about their financial advisor because they don't have one. You've got to realize this happens in levels, right? So there's like the broke people and no offense to anybody, I'm on YouTube as well, but a lot of broke people are on Instagram looking for help. Okay. So if I go on Instagram and I'm like, man, and I've been there where I'm like, I don't know what to do. I just need to find someone. Okay. The guy in the country club doesn't do that. So there's that level, right? And then if you go up above that level, then you've got kind of middle class. A lot of these people work with financial advisors. Most of their financial advisors are really insurance salespeople. If you go up another level in status, then you're going to see people that are like upper middle class where they work with, a higher tier of financial advisors. They still have a financial advisor. It's just going to be a bigger financial advisor than the last one, right? More products, more prestige, more whatever. Okay. You get to the very top. Like I'm saying, these guys do not use financial advisors. They don't use influencers. They don't use any of that. They have something called a family office. Okay. A family office means that they built a successful investing portfolio themselves. So they did a good job of learning money. Okay, they probably did learn it from somebody, but they did a good job of learning about money, applying what they learned to the point where they have a portfolio, a myriad, a whole bunch of successful investments. Okay, those investments became big enough for them to scale it into a business. Okay, a business meaning it supports itself, it produces income for the family to live off of, and it can produce generational wealth. So this turns into a business, then they go hire staff. In a traditional family office, this was invented and kind of coined by John Rockefeller, okay, founder and owner of Standard Oil back in the late 1800s, early 1900s. So he started hiring staff. A lot of his staff were his children. Okay, so you're going to hire staff. This is usually going to be children or family. Okay, and then this then turns into a generational transfer. So a family office means that somebody has enough investment, enough wealth, enough in their portfolio that it is big enough to be its own business, to hire staff full time, okay, to then generationally transfer that onto your heirs and the people that are going to manage that after you pass away. Rockefeller's trust is still around. There's still hundreds of millions of dollars in that thing. He died in the early 1920s. Okay, think about that. That's 100 years and it's still around. Okay. These guys don't work with financial advisors because a financial advisor doesn't know how to do this. A financial advisor is a pitch boy for Wall Street or for his insurance company, right? Always has been, always will be, right? These guys, the family office guys, they don't work with influencers because they don't need to be influenced. They're not looking for advice. They're not looking for products. Okay. So this is the line that I teach. This is the line that I want you to focus on is how do I build my own family office? Okay. Now, a couple things that precede that. I can't build a family office if I don't have investments that produce passive income that exceeds my savings, expenses, and taxes, right? So I've got to get that done first, which I can't do if I don't have investments. I can't have investments if I haven't been saving money. So I've got to save, I've got to invest, I've got to keep doing it until my investments give me enough passive income that I'm financially free and don't have to trade time for money anymore. Okay. So I bring all the way back to, I've got to invest, I've got to save. Before I save, I actually have to earn money. Okay. I have to earn enough income that I have enough to save. I have surplus so that I can invest. Right. So this is stuff that if I'm not doing at a basic level, it's never going to happen. Okay, some of us watching this, we're gonna criticize this because we don't earn income. We're broke. Okay, we don't have any means to actually do some of this stuff. Right? So if I'm looking at this and I'm like, okay, this resounds with me. Good. This is a goal, and I have to get really, really honed in on understanding money. Okay, I have to get really, really in on honing in and getting information and getting, knowledge on finances so I can build this. Okay, but right now that might look like I need to earn more income, save money, and pay off my debt. Right? And then it's got to look like, okay, from there, I've got to invest. I've got to invest and I've got to invest and invest and invest and invest until I've got enough passive income to make this a reality. Okay, a financial advisor, though, they're not going to tell you any of this. They're going to say, put money in your IRA so that when you turn 60, hopefully you can quit working and then you die before the money runs out. I know that sounds blunt, but that's really what that plan is. Okay. An influencer is not going to tell you this either. They're going to say, buy my product, buy my product, buy my product. They don't care what happens to you after you buy it. Right. So all this stuff, like the reason I'm going over this is because it applies to everybody. Okay. Even the guy that runs the family office, like John Rockefeller, he got his advice from somewhere. And I guarantee you where he got it from was good. Right. Because if it wasn't, he wouldn't be able to be in a position where he's a billionaire and runs this family office. So what I want to do is I'm going to open this up for questions. If we've got questions on Instagram, on Facebook, on Zoom, I want to cover those really quickly. But I want you to really consider, if you're a client of mine, like, okay, we're working together, what's the next step for you? Okay, like where are you at now? Because you're getting advice from me, you're getting it from Wealth Dynamics University. Are you taking that and applying that to build your family office? So if you're a client, that's the first thing I want you thinking about is, what is my next step? Okay, if I'm not a client, and I'm two groups here, I'm the group that understands this and I'm interested, I want you to start really looking at, where am I getting my advice from? When it comes to money, am I getting advice from an influencer? Am I getting it from a financial advisor? Am I getting it from nowhere? Okay. The other group is people that are totally disinterested on money. Like they have no idea what we're talking about tonight. They're just being crazy in the comments. This is important because 20 years down the road, if you don't do this stuff, like, you're going to be broke doing the same thing you're doing today. Government stimulus checks aren't going to be around forever. Food stamps aren't going to be around forever. Like, you have to do something with your life. If you learn this, like I said, life becomes easy. If you don't, it's always going to be difficult. So you can ignore it. You can make it wrong. You can do all of whatever you want to do to justify your current situation. But if you don't do something to take responsibility for your finances and fix it, your life will always be harder than it needs to be. And like I say, harder than it needs to be. Okay. So what I want to do is I want to open this up for questions. I'm going to check Instagram first and see if we have any good questions on Insta, and then we'll hit Facebook. Again, if you guys are on Zoom, go ahead and drop your questions in the comments on Zoom. We'll answer those live at the end of this. I'm interested to see if we actually have any financial people on here. Brad, good to see you. Good to see everybody on Instagram. No questions yet. Someone is asking, do you trade stock? I do not trade stock. I used to be a financial advisor, so I used to help people get stock and bonds and all of that in their investment portfolios. I don't do any of that anymore for good reason. So I stay out of the stock market entirely. I'm into hard assets. I like real estate. I like gold. I like silver. I like foreign currency. I like life insurance. But I do not trade stock. Someone asks, is this part of your blog? This is not part of my blog. This is a course we do. So every week we do a course on finances. And basically it's, financial education. It's stuff I wished that someone would have taught me because I was looking for it at that age. So I put it out there every week for others to be able to get access to it as well. Let's see if we have any other questions here on Instagram. All right, I think that's everything on Instagram. So we're going to go ahead and log off Instagram here. We'll see you guys next week. And we'll hit Facebook next. All right, good to see everyone on Facebook. Well, good to see you, Justin, Brad, Michael, Todd, good to see you. Emmanuel, good to see you. Series 63. I had the Series 63, Emmanuel. Zach, good to see you. Josue says, just because you have a license doesn't mean a license to drive doesn't mean you're good. I always tell my wife that when I'm driving, I was a pizza guy back in high school. So I've driven for like 6 lifetimes worth just in this lifetime. And I would always tell her, like, it's not me that needs to be worried. It's the other people we need to be worried about. Like Josue is saying, just because people have licenses, we see bad drivers on the road all the time. Just like I see bad financial people that have licenses all the time. Michael says people have licenses and still get into accidents and pulled over all the time. True. right, that's all I see on Facebook here. So what I'm going to do is I'm going to go ahead and flip back to Zoom here, and we'll go through some live Q&A on Zoom. Again, if you guys have questions on Zoom, drop them in the chat, drop them in the comments. We'll go over them. Good to see everybody tonight. Brian, good to see you. Brian says, good job, good course. Thank you, Brian. All right, we have a question here from Casey Lewis. So let me go ahead and bring Casey live here. All right, so what I'm going to do is I'm going to unmute Casey, and we're going to go ahead and hit his question live here tonight. All right, Casey, I have you live here with us tonight. Let me know when your mic is on.
I didn't really have a question. It's more comment.
Hey, what up, Casey?
How you doing?
I'm good, man. How are you doing?
Not too bad.
Cool. So you said you had more of a comment?
Yeah.
Okay, cool. What's your thought?
Well, like all the licenses, because initially everybody's taught it's like, oh, they got to be licensed or they got to have their designations, which they don't necessarily explain to you what they mean. So it's cool that you explain that. But it's like teachers, you know, they all got their degrees, but it doesn't necessarily mean they're good teachers.
Yeah, that's super true. I see that a lot. Well, cool. Did you have any questions you thought of that you wanted to cover while you're here with me real quick?
Not concerning tonight's topic.
Cool. Anything else financial related?
Yes.
Cool. Let's hit it.
So lots of people are like, if you, I don't know, like I'm licensed to sell real estate, and I know I don't leverage it as well as I could, but somehow some people just can. And I hear all these people like, oh, I invested in real estate, and I'm like, where do you guys find, or they're like, how do I say it? I don't use my own money to buy these properties. It's like, where do you even find those people to invest? And just, I don't know. Does that make sense?
Yeah, kind of like raising private capital.
Yeah.
Totally. I've got your question there. So what Casey is asking is he's basically saying he's in real estate, and in real estate, certain realtors, and I'm from Anchorage, Alaska. I think that's where Casey's at too. Certain realtors, they somehow get these private investors. They'll find people that, you know, have capital that want to put into some kind of real estate deal. Now, there's a legal way to do that, and there's an illegal way to do that. It's very unregulated. So lots of people do the illegal way and they get away with it. The legal way is if it is a private deal and I'm raising private money, I have to file something called a Regulation D with the Securities Exchange Commission. And then I actually have to have something called a private placement memorandum. It's like a business plan with a disclosure of all the risks that these investors might face. So when I solicit and I go to my friends or my family, or I network and try and find private investors, I'm supposed to give them this document every time I talk about my deal, so that way they can see all of the information in total transparency, and they can check with the SEC and make sure it's registered. And that way, if I rip them off, they could report it. They could go to the SEC and say, hey, this guy put me in this deal and ripped me off. That's the legal way to do it. The illegal way to do it is just say, hey, I've got a deal. Do you have some money? The investors don't know you're supposed to have this document, so they're not going to ask or check. So it's kind of like lying on your taxes. If you don't have it, no one's going to care till you get caught or someone checks. So that's kind of how that works. And as a realtor, I would definitely like that's a great way to raise capital, but I would definitely try and get my own deals under my own belt first. A lot of investors don't think about that. For me as an investor, I don't want to invest with someone that didn't do the deal before they're asking me to do it. So if it's like brand new to them and they're like, yeah, we're raising money to buy it, I don't want to get in on a brand new deal. I'm more comfortable with, yeah, I've owned it for 3 years and I'm looking to refinance my stuff out so I can get another one. You don't need to know about the new one. I want to show you this existing one that cash flows and has all of these things that I can prove. So just my own, little opinion on the due diligence side of things, but that's a very good question. Let's see what other questions we have here tonight. Looks like Hector has a question on gold. Let me go ahead and put Hector on live here. Oh, we may have lost Hector already. I think he might have tuned out for the night. Yeah, so Hector had a question, how can I buy gold? So you can buy gold a number of places. The easiest place to buy gold is from Wealth Dynamics. We actually have our own gold and silver brokerage. So if you go to metals.wealthdynamics.com, again, metals.wealthdynamics.com, basically that's going to be an online site where you can go over and buy gold on retail, wholesale, or subscription. And so you can purchase it there. Again, that's metals.wealthdynamics.com. Let's see what else we have here. Oh, Casey had another question about family offices. Let me go ahead and bring Casey back on. All right, we have you live again.
Yeah, so you talked about the family office. So speaking about that, so if my wife has like her own business currently or is thinking about starting a business, could I create one instead and then like hire her for my business? Does that make sense? Is that like the family office and then eventually building wealth through all the tax breaks and leveraging your income and whatnot?
Kind of, yeah. So the family office, let me go ahead and break that down for you. And I'm also going to sketch it because this is an easier one if I give you a visual. So let me go ahead and draw this out. And this will be good for everyone to see. So the family office is typically going to be a corporation or a trust. Okay, so if I have a family office, I'm looking at a corporation or a trust. And it's kind of like an umbrella company. And inside of here, I'm going to have businesses. I'm going to have real estate. I'm going to have other assets. Right. But the big thing here is that this corporation or trust is going to be fully staffed by people other than myself that I have personally hired and trained. So it's literally the definition of I got to the top of the mountain and then I helped other people get there. So I build out, like, for you and your wife, you guys have a business, you build that up, that's an income source. You're going to use that to save money and fund investments and all this other stuff. And as you start building this mountain and you get more and more layers to it under this corporation, then you have your family office. So the family office should produce enough passive income that it exceeds your savings, expenses, and taxes. That basically buys you and your wife out of your full-time jobs. You don't have to work anymore. So you are your first two hires. Now from there, all of this money that you're bringing in revenue, beyond that, you start then reinvesting it and growing the corporation and growing the trust until you can then hire another staff member and another staff member. So it really is turning it into a business, and it's probably going to include some of your current businesses. But by the time you get here, the average family office minimum to start one is usually 10 million. 10 million net worth. So think about building it up to a $10 million net worth, and then you're converting it to a family office. And the amount of passive income generated off of a $10 million net worth is ridiculous. If you just look at, a 12% return, for example, on a $10 million net worth, that's around $1 million a month. So at $1 million a month, like, how many people could you hire? How much reinvesting could you do? And really, that's the intent and purpose of a family office. Once you hit that milestone, a lot of these do turn into like venture capitalism and angel investing. So if you think about it, I've got this base layer of passive income. Now I can start buying other businesses and investing in startups. It's all the exciting stuff people want to do now. They're just doing it backwards. Really, you would do it at this level of, okay, I'm at this pinnacle. I have the family office. I'm secure and financially free regardless. Now I can go play with some of the money here. So that's kind of what that visually looks like. I know that's kind of a crude depiction of it, but for me, visuals always do help. So that if that answers that question, let's see what else we have here. Casey says long-term goal for 10 million. Definitely, so it is work. It doesn't have to take time, right? It's either going to be, it's about effort, right? So if I want it to be like more time to relax and enjoy life, then I'm going to stretch it over a longer period of time. If I don't mind sprinting for 5 or 10 years, then I can compress 30 or 40 years worth of work into a 5 or 10 year period and get there much sooner. It really comes down to what are my priorities and what's important to me. But either way, whether you're 60 or whether you're 40, when you achieve that, you're going to be well off and financially free way before you're a family office. So you're good either way. All right, we do have some questions on Facebook. We have one from Noel. Noel says, hey, Jerry, love what you're doing. My question is, what would you say that the 3 things to focus on are when it comes to building financial freedom are? My question is, would you say that the 3 things to focus on when it comes to building financial freedom are building your sacred account and investing in gold and silver? Those are 2 important ones. So, well, that's a good question. So when it comes to building financial freedom, the sacred account is important. Gold and silver are important. But the 3 most important things are earn, save, and invest. Earn money, save money, invest money. The sacred accounts and also gold and silver, those fall under the saving category. We've all heard that phrase, it's not just what you make, it's what you keep. Well, it's also not just what you keep, it's where you keep it. So if I keep it in, banks or the stock market, it's not really doing me much good. I want to keep it in places where I have control over it. It's not going to go down in value. I have ability to borrow against it and leverage returns in multiple places at once. Gold and silver allow me to do that. So you are right in the sense that those are probably the 2 most important places you could save money. But for me, it's called the triangle of wealth. Again, it's earn, save, invest. If I do those 3 things and I do them over and over and over, and I do them rapidly and effectively, then I'm going to build wealth and financial freedom. Great question, Noel. Let's see if we have any other questions before we wrap things up here tonight. Good, guys. I think that covers it. That's all the questions that I see. Let me make sure I'm not missing any others here. Yeah, that's it. So, guys, we're going to go and wrap up for tonight. Thank you all for watching. Make sure that you tune in again next week. If you need to rewatch this, go ahead. We'll have the replay on Facebook. We'll put this up on YouTube, and we'll see you all next weekend.